Hey guys, this is Alan here from the Equity Traders Academy division, and I just wanted to share something with you which I showed my students today, and everybody was in a little bit of a shock as to, how is this possible, how is this happening? And I just wanted to explain it to you so that you can understand it, so that you can see what it's doing. And no, it's not just on my favorite pair, GBP USD, it's just about every pair. If you trade the rules, you trade the strategy, you'll understand exactly how it's working. So, without further ado, let's quickly go there. Right, so I've opened up GBP USD. This is Sunday, and the reason why I've got Monday open is because I want to show you what happened on Monday. So, you as a normal retail trader would see this. Okay, and what would that mean to you? Well, one of two things. Let me first show you the first thing. First of all, we have a double top there. And what happens with the double top? Up, down, up, it'll drop. But even before we get there, let me show you how I'm trading this. So I like to make sure I know where the Asian session is. And the Asian session is running a high and a low over there. So the Asian session trades a high and a low. And the Asian session, the Asian session is until 8 o'clock, so that's till there, like that. Right, so the Asian session is 8 hours, first 8 hours of the day. So what I like to do is I like to come in with my trend line and I draw my wedges. The reason why I draw my wedges is because I like to see when price breaks what? When price breaks the highs or the lows of the day, then I know I'm in. I know where I am. I know what I'm doing. So there is basically my wedge, and I'm saying, okay, if price drops there, I'm looking for a stop hunt. If price goes up, I'm looking for a stop hunt. So what does the market maker do? The market maker needs liquidity. What is liquidity? Forex market, people buy, people sell. If there are buyers, we need to have sellers. If we have sellers, we need to have buyers. If we've got too many buyers and too many sellers in the market, there isn't enough liquidity for the market makers to push and to move the market as much as they'd like to. So what they do is they entice traders to go in a certain direction, and then they just whipsaw them out completely, and they take all their liquidity and they move the market where they want to move. Remembering, retail traders trade up to 0.5s, 1s, 2s, maybe 5s. If we're lucky, bigger retailers trade up to 10 lots. Market makers trade from 100 to 1,000 lots. So imagine having enough money, a couple of million, couple of billion, whatever, in the market so that you are able to move the market around and make an impact. So what did the market makers do? Market makers do a stop hunt. What is a stop hunt? So essentially, the market maker breaks the high of the day. They move it up, 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 creating a high, and then they'll drop it all the way down. So what are you doing as a retail trader? As a retail trader, you are now coming in and you are buying where? You're buying here, right? Where's your stop loss? Your stop loss maybe would be there. And had you been lucky enough, you could have traded that and made the 20 pips. However, the market maker is enticing you. He's giving you, he's taking back. He's knocking out the stop losses. Was it enough? No, it wasn't. Pushes it all the way up again. And then, look at these. The minute you see this kind of a candle, this huge long candle, we know that this candle is telling us the price is going to drop. Where would I then enter my trade? I would see the M. Oh, what is the M? Let me quickly explain that to you. It's a double top. Top 1, top 2. Or, let me show it to you in a normal format. An M is an up, a down, a up, a down. Can you see the M? Can you see it? Right. So M's mean we're moving the other way. Right. So let's go and move that. So price then has moved up, down, up, down. What does the market maker theory say? The market maker theory says if we then have an up, a down, an up, we wait for price to break the high, we trace, we enter there. Where would our stop loss be? Above the high. Now, if you see that, remember it's about 20 odd pips. We cannot have a huge one lot as a trade if you've got less than $5,000 because, really the loss on that is huge. So it's a small pip. It's a small volume. Okay. And had you traded that, you would have gone from there all the way down to there. And you would have made money out on the stop loss. How do you know how far to go? Well, you look for the pattern. You look for the candlesticks. You look for the telling, for the price to tell you. So how do we look? We look for a double bottom. Double bottom 1. Right? Double bottom 2. They're not always that easy or the same length. Sometimes this one would be higher, but you're looking for candles that are telling you it's a double bottom. Or, let me show you the W. Remember we had the M there. Down, up, down, up. Is the W. Market maker patterns. M and W. Okay, very easy to see. Clear as day. Right, so the Asian session created a high and a low. We drew our widget. We saw our price going up. We know there's a stop at high. We wait for it to come down to the Asian high. We enter over there, made all the pips down. We know that we've got to exit either there or we would have exited there or definitely there because we would have seen the W pattern. If you now want to trade the high in the American session, where would you have entered? Right, so there is the height of the W. So you can either have entered there, because price would have gone up, retraced back, and you could have entered there. So I would have been in, if I was in, I would have entered there and left it overnight, knowing that price would have gone all the way up. Right, so that was Monday's trade. Easy capeasy. Can I show you today, this is Tuesday, what happens on Tuesday? So, same thing, my friends, same thing. So, price created a high, Asians created a high, created a low, draw our trends, okay, draw our wedges, drawing the wedges there, and we're saying, right, there's our wedges. And what did price do? Price broke it down, broke past the Asian session, okay, and then came all the way back up again. Where would you have entered? Your entry, Asian high, you would have looked around there. That's where you would have entered along. Had you have entered along there, you would have been in the money. So what are we looking for right now? We're looking for an M. Up, down, up. Where's price going? Okay. Can I show you the W this morning? Down, up, down, up. W pattern, M pattern formed. W pattern, price is going up. M pattern, price is coming down. So until that has formed the second high, oh, it looks like it's forming it, till it's formed the second high. It then drops. Only after this area here would you consider a trade low, and your stop loss would be up here. So stop loss would be here, TP would be, your entry would be over here, and at least put your TP around there, cause price has to come all the way down. But we'll wait for the W to happen at the bottom, or the double bottom to happen at the bottom, and then we would close the trade. Okay, so go and check this out on your GBP USD. Go and check it out on other pairs. Go and see if this makes sense to you. So you start your Asian range, you know your Asian ranges, draw your wedge so that you can see when price breaks. Price breaks in a particular way, wait for 20-30 pips for the break, and then you'll see the push all the way up. Happen on Monday, happen on Tuesday, you can go to just about any pair. Here you go and you have a look at it. What did price do? Stop hunt low, all the way up. Okay, what are we looking at? Down, up, down, up. There's your W. You understand? W's at the bottom, M's on the top. Up, down, up, down. What did the price do? What did price do? Oh, goodness. All the way down. Okay. Alright guys, happy trading. Go back test it, go and have a look at it, go and see what it's all about. And come check out our website, theequitytraders.com. Go and have a look at our broker, Trade Nation. Get a funded prop broker, Audacity Capital. And yeah, let's trade.